Welcome to Chicago Booth's Distinguished Speaker Series. My name is Star Marcello. I'm the Executive Director of the Polsky Center for Entrepreneurship and Innovation at the University of Chicago and the incoming Deputy Dean of MBA programs at Chicago Booth. There will be 3 people speaking today. You'll hear my voice and you will see and hear from our distinguished guests, Dean Rajan and Byron Trott. On behalf of Chicago Booth, thank you all for joining us. We know you have a lot of demands and challenges for your time and your attention right now, and we appreciate your interest. Over to you, Madhav.
Great. Thank you, Star. Good evening, everyone. Star said I'm Madhav Rajan. I'm the Dean and the George Pratt Schultz Professor of Accounting at Chicago Booth. Hope all of you are doing well. It's great to see so many of you here today. And it's truly a pleasure to have all of you as we welcome Booth alum and University Trustee Byron Trott of BDT and Company to our virtual Distinguished Speaker Series. The DSS, of course, is a long-standing tradition at Chicago Booth and brings high-profile leaders from the government, from business, from the community to share their insights and experience. Now, we kicked this virtual series off a few weeks ago. We've had some great chats with Kurt Del Bene from Microsoft, Tom Ricketts from the Cubs, and last week, Jenny Scandon of UL. And we've learned a great deal about these executives and how they and their companies have responded to COVID-19, and then many more topics beyond that. And we'll wrap the series up next week when I have a chat with Professor Richard Taylor. So let me introduce today's distinguished speaker, Byron Trott. Byron is founder, chairman, and CEO of BDT and Company, which is a merchant bank that provides advice and long-term capital through its affiliated investment funds to help family and founder-led businesses around the globe pursue their strategic and financial objectives. BDT was founded in 2009, and since then it has raised approximately $18.3 billion across its investment funds and has created and manages more than $6 billion of co-investments from its global limited partner investor base. BDT's network of clients and investors include the owners of many of the largest family businesses in the world. Now, prior to founding BDT, Byron had a distinguished 27-year career at Goldman Sachs, where he was vice chairman of the Global Investment Banking Division from 2005 to 2009. So we're thrilled to have Byron here today to chat with us about COVID-19, but that's just a small part of the many topics we're gonna talk to him about, as well as any topics that you would like him to speak on. Byron, thanks again for agreeing to come here. So I wanted to maybe start with, just, you know, your background. We have a sizable number of students from the college as well joining us. Just a little bit about your background, where you're from, and what brought you to the University of Chicago.
Great. First, I'm honored to be here. Thank you for having me. University of Chicago has played a really important part of my life. And I grew up in a very small town in Missouri, Union, Missouri, a town of 5,000 people. I had 3 older sisters, great parents, and education was always a focus. But I would say also I was very sheltered in this small town and had never flown on an airplane until I flew with an application in hand to Chicago after one of my sisters dared me to give up my sports opportunities for college and go to a real university like University of Chicago. And the fact that I discovered that it had a program at the time that might allow me to get in and out of undergraduate and graduate school in 5 years, it was a perfect place for me, and being extraordinary in economics and a great business school at the time, as it does now in both. I flew with application in hand in August, turned down Washington University, a full ride, full scholarship there to take a partial scholarship to University of Chicago, and it was well worth it. So that's how I ended up there.
So you mentioned
thankfully it worked out. I did get into the business school and I did get through in 5 years, and I went to work for Goldman Sachs.
So you mentioned the 5 years. So you were a graduate of what used to be called the Pro-Op program, the professional option program, where you did your MBA, BA and MBA in 5 years. What do you remember about your Booth classes, and did you always know you wanted to go into banking at the end of those 5 years?
No, it was kind of different. You know, I think because of my sheltered life growing up, and then going into the college in economics and liberal arts education. Honestly, in my first year of business school, I didn't know what an investment bank was. I had worked that summer for Continental Illinois Bank, a commercial bank, started to figure out what that was. Barely knew what a stock or bond was. And the next thing I found myself was, finishing my first year of business school and interviewing with investment banks, and deciding that I liked the challenge of it and liked it a lot.
So you were at Goldman at what I think many have said was sort of its golden age. Could you speak a little bit about why you thrived so much there?
Yeah, I think the thing that the great thing about Goldman at the time, and still today, I mean, it was the most coveted job coming out of business school in 1982. I had a friend of mine that there were 5 of us, I think, that got into the professional option program that year and finished the professional option program. And one had worked for Goldman in the summer, John Winkle-Reed, and later become the co-president of the firm. And he and I had played baseball in college together, and he kind of called me one day and said, this place could be the perfect job for you. And I interviewed and went there. And the golden age of Goldman, what we liked about it so much, what I liked so much about it, was the fact that it did seem to have, it was one of the few remaining partnerships left on Wall Street. It was, had an incredible reputation, were incredibly good at what they did across the board. Much smaller firm at the time. I think in 1982 when I joined, there may have been 2,000 employees or something, if I remember correctly. And now that, when I retired in 2009, there were 35,000, I think. And so happened to be at the right place at the right time in the firm that had a tremendous reputation. But what I liked most about it was a continuation of what I had at University of Chicago, to where you could debate with, a tenured professor, you could, have a discussion about what your views were versus theirs. And Goldman was like that. It was, no matter how senior you were, a guy on the, 2 of the 6 partners on the executive committee, I think when I joined, I had regular dialogue with on a regular basis, and the top 6 partners of the firm at the time. So really like that. It was a mentorship and a real place of quality and teaching at the time of that was quite attractive to a young guy that knew nothing. As I said, when I arrived at Goldman, I barely knew what a stock or a bond was, and it was a great place to learn, just like University of Chicago.
So you've talked in the past about mentorship and how important that's been to you through your career. Could you give some examples of that, like people who were mentors to you, people that have helped you through your career?
Yeah, from the day I arrived, I tended to, at Goldman, I had some really good mentorship. I mean, the longest lasting and the one that remains with me today is Hank Paulson, who, even though I started my career, what Goldman allowed me was, for whatever reason, I tended to get bored after 5 or 6 years and get to restart and try the next challenge. And I really stacked 4 or 5 careers within a career at Goldman Sachs onto one, and building blocks to ultimately become what we are now. But along the way, at every step, at each division or each job I had a great mentor that wanted to help them. And obviously you have to work hard for them, and they get value too. But the longest lasting was Hank Paulson. So when I left private wealth management in 1989 after 6 years, at the request of Hank Paulson to come work for him, and once we had decided that there was a job where I could just focus on owners of businesses in the investment banking division, and many of those being those that I managed their money, Hank for 20 years was a great mentor to me for all the way through my 27-year career. Now he left in 2006 to go be Secretary of Treasury, which then came back yet again in the financial crisis when he was in Treasury, and I was trying to help Goldman figure out what to do, and managed to get another mentor of mine who had become a very close client and great friend and great mentor and teacher to me, Warren Buffett, in 2002, I guess, is when we started doing things together. And that all kind of came together in the 2008, 2009 financial crisis, where Berkshire Hathaway put $5 billion into Goldman Sachs to help us, and ended up helping a number of others as a result, and $3 billion in General Electric. So those type of mentorships, I'd say Hank and Warren probably have had the biggest impression on me from the age of 30 to the age of 60. and they're great mentors to have. And I've had
And
many
so-
others. I mean, many clients. I mean,
Sure.
Tom Pritzker Tom Pritzker I've worked with forever, and he kind of opened my eyes up to the global economy and the Hyatt hotels in Asia and India and China and throughout, and having the board go abroad. And we got many like that. Andy Taylor from Enterprise Rent-A-Car, who allowed me to learn from them and were patient to teach me along the way.
So if you, could you speak a little about the decision then to start BDT in 2009? And you've been incredibly successful by any measure. So could you just speak a little bit about your vision for BDT, why it succeeded, and is it now doing what you thought sort of 10, 11 years ago?
Yeah, we set out on a mission. I saw one had finished an incredible run at Goldman Sachs for 27 years. And I thought the financial crisis was the perfect kind of crescendo. It had a pretty important hand in a number of things that we did at the time. And honestly was looking for a new chapter, thinking about a new chapter. And I had always thought that I would have my own firm, but I knew that I would know when it was right at the right time. And I think over the prior 5 or 10 years, I had started to really look for this void that seemed to be developing in the world of private founder and family business owned owners, and what they needed, kind of advice, long-term advice. Advice is if you own their company themselves, what would you do if you were them? But having the financial expertise to be able to provide that knowledge to them, because they're busy running their companies and oftentimes they didn't have that. And a little bit about the pace of Wall Street can get to the point where, it's very transactional, and you may have to slow down, take the time and really understand the objectives of the client, very much the way I started at Goldman Sachs. I mean, it was always understand your client's objectives, put their interests first, everything else will come after. And I think that there's a very big component of that in BDT on the advice side of the business, talking people out of doing deals, even if you're going to give up fees, just as much as talking them into great deals if you really think they're the right thing. So, but it was really combining the advice part of it, long-term trusted advice, to a different type of capital, because capital formation with private equity firms, rightly so, over a 30-year period, if you think back, when KKR and others really started getting into the business, they did exactly what we did at the time. It's longer duration holds, big returns to your investors on a multiple of money basis. But then over time, it became more and more a need for shorter and shorter term capital, 3 to 5 year money, not necessarily 10-year money, and using the capital markets to benefit returns, especially IRRs. So putting incremental leverage on balance sheets to get the right return to the equity account started to drift from the way owners run their businesses. Owners of businesses tend to use more conservative capital structures, less leverage. They want partners to stay with them for 10 or 15 years, not 3 or 4 or 5. So there's nothing wrong at all with the private equity market, in the mid 90s or the 90s really took a major shift and became much, much larger in the amount of capital they managed, and in a bit of a different way. And we just saw a little bit of a disconnect by the time 2009 arrived with owners of businesses. And I think the financial crisis really underscored that, and watched a lot of owners of businesses, for one reason or another, not be able to get the right advice, not be able to find the capital they needed in a financial crisis, many of whom were private. And I think when you put the advice and the capital together and then provide a platform to where you're encouraging and convening people in small groups and large peer networks to learn best practices and worst mistakes from each other, it becomes a very important closed system and a foundation that I think everybody benefits from. And I think that's what we do uniquely different. There's nothing, that complicated about it, but we spend a lot of time on really educating and collaborating and convening our network of business owners around the world, so that they all come away with global perspective and a lot of additional help. And I think it's not a lot different than an investment bank or a private equity firm. It's together, and I just say it's a little bit longer term in both capacities, and a little bit more tailor-made in many ways.
Thank you. Could you speak a little bit about how the past couple of months with the pandemic, have they impacted your business, and what do you see kind of coming down the road?
Yeah, it's, I mean, obviously, I'm sure nobody on the phone or on this call there is no playbook for something like we're going through right now. And the uncertainty and the fear that it causes, you saw the crescendo of the fear factor probably 8 weeks ago with the markets and everything. I think that we're benefited in a way in that I went through the 1987 market crash. I went through the 1999 technology bubble burst, the 2001 September 11th, the 2008, 2009 financial crisis, and pretty important positions and managing through those at the time and dealing with owners of businesses on every single one of those. And I think it gives you a different type of resolve and a different ability to react and respond in a pretty rational way. But again, I'd say nobody can predict what's going to happen here. I'd say the markets for us, I mean, obviously, 4 to 8 weeks ago, for anybody that has $20 billion invested in the market didn't feel good. The way we structure our investments, in combination with the owners of businesses with a bit of protection and structured equity component to most of what we do, feels a lot better than just owning public equities and watching them go down 35%. But as you know, what's happened now, I think makes it even tougher for everybody because there's no vaccine out there. There's not likely to be a vaccine for 12 to 18 months. A lot of really smart scientific groups around the world trying to come up with the answer. A lot of great pharma companies, everybody's working together, lots of collaboration going on. But it's unreasonable to expect a vaccine to be developed for the coronavirus, which is a complex virus and transmitted easily and with by people that have no symptoms or unknowingly have it. So that is a problem. So social distancing and what's going on right now obviously is immensely helpful to flattening the curve, stopping the rise, but it's hard to say that in the next year that this is going to be a straight line recovery. I do think the debt and the equity markets are now priced for perfection. And I think that is not the right place for them to be. I just think that you have the election coming up, the leadership and the friction, political, socioeconomic and political friction around the world, the uncertainty from that, the virus, what happens, if there's just a lot of uncertainty that's not priced into the market, I would say that. Now, we don't tend to invest in public markets. We do occasionally if we only deal with closely held, controlled, family controlled or founder controlled companies. But there are plenty of those that do trade in the marketplace. And if they get hit too much, we will go in and take a stake and work with the owners to do what we do as if they were in a private. But it does affect the overall valuations. The public markets obviously always affect an owner's view of what their business is worth. And it also makes acquisitions for them more expensive.
So you mentioned
So to me, it's very uncertain what happens over the next 12 to 18 months.
Mm-hmm. And so you mentioned the many different crises, if you will, that you've sort of been through. And you've also spoken in the past that there are always people who benefit from these disruptions, right? You go through, you find an opportunity. Do you have any opportunities that you see sort of as a result of this situation?
Yeah, we have, I would say, 3 very active deals in the pipeline that have arrived on our doorstep because of this. Either owners needing capital because their stock price is hurting the marketplace or their value is down, or somebody's finally willing to sell, their competitors finally willing to sell to them and they need additional capital more than they can borrow. Even with the recovery in the debt markets, I'd say the debt markets haven't completely recovered and just as easy to raise money. So we find ourselves in an environment that By the way, the Fed and the Treasury, I think, have done an enormously good job of getting stimulus and capital into the markets that caused the reaction in the markets. And I think the Fed's been remarkably fast and remarkably good in getting that. On the other hand, we find ourselves, you can't continue to put the amount of a percentage of GDP that they have, the $3 to $6 trillion just in the last 8 weeks. You can't keep doing that without creating very significant long-term problems. And so for us, yes, I just say, without giving too many details, yeah, we have definitely had increased deal flow as a result of this, because we're known to do deals in a very collaborative ownership way with owners of businesses, and in tailor-made capital designed to align interests and last for 10 to 15 years rather than a shorter term time period. So to get them through this. So I think that we definitely, our business model is very well positioned for times like this. I would say that.
And one last point on this, and then I'll switch, is do you view this crisis, if you will, as different fundamentally from ones that you have seen before, which you talked about, whether it's 82 or 87 or any of?
Yeah, I honestly think, I mean, most are looking back to 2008 and 9, and that was a very quick that was a financial crisis with over leverage in the financial markets and the mortgage crisis on top of it, and all of that combined. That was a very much of a V-shaped recovery, as everybody says. I don't think that we can have 20 to 25% unemployment rates, which we do and we will for a while, and it's going to be very sticky coming down. I think many of the people that have been laid off or out of work are going to be hard to redeploy back in and slower to redeploy back in. So as a result, that's a huge drag on the economy when you think about the drag on the economy and what that means for corporate earnings and everything else. So I think that I think this, in many ways, I kind of feel it's a combination of the reaction to September 11th and the 2008, financial crisis combined. But people have asked me, do I think this is a V-shaped or a U-shape? I think we're at the peak of the W and we're going down, and we may flatten out. I'm not sure. I don't think this is going to be a straight line up. And I think that there's going to be a realization factor, and God hopes the coronavirus or some other pandemic doesn't come in the fall time, or confusion over the flu versus the coronavirus. I think there's a lot of uncertainty that could be injected into the system and we go right back through this again. Singapore right now is going through a second wave, and they're locked down and for another couple of months. And these are not regions of the world, and regions of the United States will recover differently. And as a result, I think the uncertainty and the fear will continue to exist. And the hospitality industry, from airlines to rental car companies to hotels, it's restaurants, those are going to be very slow to recover.
So let me switch topics. So you're a trustee of the university. You've been very involved with the university, and sort of more broadly, you've been very philanthropic. You founded a nonprofit, the Rooted Alliance. Could you speak a little bit about that? Sort of what drove you to choose the kinds of philanthropy that you do?
Sure. Most of it has been education focused, mainly because of my own background. A little bit of healthcare, but principally education. And it's basically, deriving from my own past. But the first, I guess, major initiative at University of Chicago that I'd say the college and the Dean Boyer and others have executed so well, and is the Jeff Metcalf internship program. And that was started because one of my mentors, Jeff Metcalf, who was the athletic director when I was there and the retired dean of students of the business school, basically, if you had really good grades and played sports well, he would get you job interviews. He wouldn't get you jobs, but he'd get you job interviews. And there were 5 or 6 of us that benefited. over a 2 or 3 year, every summer between our school years, we had the opportunity to go interview with 3 or 4 companies and actually have what I call real summer jobs. And as a result, that allowed me to know what I didn't want to do by the time I hit graduate school and interviewing for other jobs, and actually led me to Goldman Sachs and investment banking as a result. So and it probably really did have huge impact on me knowing what I wanted to do by the time I decided to do it, and have a 27-year career at Goldman Sachs rather than bouncing around 3 or 4 places before I found something like that. And so that was the first one, and starting that internship program, I guess, 4 or 5 or 23 years ago, in Jeff Metcalf's honor and name, and going from, I think, 8 internships that first year to 3,000 this past summer for students in the college, feels good, and it's worked really well, I think, for everybody involved. And then the other thing, this Trott Career and Businesses was really an attempt to put the opportunity that I had to get through, if you really knew what you wanted to do. I had a feeling when I looked at all of those of us that had gone through the program, or at least the ones that I knew, we all seemed to do pretty well. And maybe if you knew what you wanted to do, you might as well get school behind you and not worry about going to work for 3 or 4 years and coming back, you know, when you're in your late 20s rather than your early 20s. And so that program has been, you know, looks like it's on track to be equally successful. And the most recent is we started an initiative. I got very involved in Horatio Alger, which is helping, you know, 2,500 poverty line kids every year get scholarships to college. And I ended up becoming the president and the chairman, and University of Chicago and other universities leaned into giving kids Horatio Alger scholarships that my wife and I funded, and then we formalized it, and then we started something at BDT. Our first major initiative in our philanthropic effort is called Rooted, and it's where we're putting counselors in high schools in rural America and having a very big impact in increasing the go to college rate or go to technical school rate pretty dramatically. And the last program at University of Chicago that we funded just a couple of years ago that you all have been so helpful with, and Jim Nondorf arranged, and that's the attracting rural kids to come to the college and then hopefully on to the business school and others. And it's a demographic that got overlooked for a very long time, and we're putting a spotlight on it. And I feel really, really proud of those 3 initiatives at the University of Chicago. And it's really just a passion of mine to really get back to people that have similar circumstances that I had as a kid. And there's so much talent in the United States. So these in high schools, and these kids are really smart, and oftentimes just don't know what their opportunities are. Don't know they can go to school. Don't know that the money's there. Don't know that they're smart enough to. Don't know the difference between I used to drive me crazy. Even after graduating from University of Chicago, I go back to my hometown, and my college counselor, also the football coach and the driver's ed instructor, would say, "Oh yeah, that University of Chicago Circle campus, that served you pretty well," and it would just make me crazy. But anyway, nothing against University of Chicago Circle campus, but it's not our University of Chicago they were talking about.
So we have lots of questions. So Byron, I'm going to turn it over to Star, and then I'll come back at the end and ask one final question depending on how things go. So Star, take it away.
Thank you. Thanks. And thanks, Byron, for sharing your thoughts. We've got lots of questions coming in, and I thought you would appreciate that one of the first questions was about how playing football at the University of Chicago as an undergrad influenced your career, and what are your feelings about Jeff Metcalf? But I think you've answered that question, so I'll just ask you, is there anything you want to add on that topic before we go to another question?
Yeah, I just say the role of sports for me, you know, in football and baseball at University of Chicago served me well. It gave me a diversion. I mean, the university was great back then, and even today, I think. Sports are a great diversion for me at the time. I had grown up with sports. I had excelled at sports, and intended to play sports, and decided to put academics first. And Chicago is a great place for that. That it provided me a great balance to be able to continue to do that, but know that academics were, you know, the first priority. But gave me a diversion factor that allowed me to enjoy, my college experience a little bit more. And both my football teammates and baseball teammates, many of us, stay in touch today. And what's incredible about University of Chicago, both the undergrad and the graduate school, is the diversity of the paths that everybody takes. We all have a common bond with our education in the college or the graduate school. It just blows me away to look back. Maybe it's just how long we've been graduated, but the diversity of experiences, professional careers, philanthropic endeavors, everything. It's an amazing university that provided an awful lot of us with a great foundation to go find our passions and excel.
Thank you. So we've gotten a few questions on a similar theme, which is that people would love to hear about your highlights and lowlights. So we've gotten a question: what were your best and worst investments, and what lessons did you learn? Are there any stories you can share of overcoming obstacles, things that were either total highlights or things that were difficult?
I distinctly remember, I get to my professional career, I distinctly will never forget the first paper that I wrote at University of Chicago in the college, and worked 2 all-nighters on it, and basically handed it in and got a D+. And I was not used to that type of a grade, and literally thought I was going to flunk out and I would never make it. Ended up that I just didn't know how to write. I'd never been really exposed to writing, and the good news is professors and different people where you'll spend time and help you and everything. But I just, of my entire college career, I will never forget that moment and looking at that paper and then spending the next 3 nights on it again. So anyway, so that's college. On my investments and everything, when I was about 27 years old, I was a private wealth management salesman at Goldman Sachs, and for the first time started to make decent money. I paid off my $52,000 University of Chicago loan that I had accumulated through undergrad and grad. And I think I took my entire liquid net worth, $300,000, or probably 300,000 out of 500,000, and invested it in a company which will remain nameless. And it was a minority stake. Ironic that we now invest mainly in minority stakes in large companies. And it was a great investment, other than the owner not willing to sell or let any of us monetize our stakes until he was ready, and he ended up dying. And his management team leaving and the company going bankrupt. It was a great lesson to learn, but boy, was it painful at the time. So that was probably my worst investment. But lessons learned, and a great lesson learned. I mean, there's so many highlights. I mean, I have so many highlights and lowlights. I mean, the one thing we take pretty seriously, and I take pretty seriously, is to always learn from your mistakes. So really to analyze what went wrong, why it went wrong, and not to do it again. And we've been fortunate at BDT to do reasonably well across the board. Obviously, we have some investments that we'd preferred to not have done, but we have no wipeouts or no nothing like the one I just described at all, or nothing, even none that I think that will not get at least our money back, and in most cases we get multiples back. So the highlights of my career, I'll never forget the day I met Warren Buffett. It was supposed to be a 1-hour meeting. It was arranged by Hank Paulson when the former partner of Goldman had retired that covered him, and 1 hour turned into 4 hours. And I asked him what he had never been able to accomplish in the world of finance, and he gave me a challenge, and thankfully we figured it out, and that led to a whole bunch more, and a good friend and a good mentor and a good teacher. So that would be it. That would be it. I've been pretty fortunate. I've had a great run.
Thank you. So we have a question that there's also a similar theme here in many of the questions. You mentioned that you always knew you wanted to have your own firm. What underpinned that confidence, and what are the differences between being an effective senior banker at a big firm and the founder of a new firm?
Great question. I think it harkened back to that challenge my sister gave me. One of my sisters gave me to go to University of Chicago and kind of break out of my comfort zone. I was pretty comfortable that I could have gone to many colleges and played at least one or two sports, and but I was fortunate that that academics came pretty straightforward to me as well. So I had a lawn mowing business, or what I called a lawn mowing business. I cut a few yards and had a couple of younger kids work for me occasionally. And I also had a jean shop in my little town that I grew up in. And so I was kind of an entrepreneur at heart. And I literally thought seriously about not going to college at all. And that would have, so anyway, I think having that entrepreneurial experience early on, private wealth management at Goldman Sachs, which is the career path I made at the time, was like starting your own business. Back then, there were actually phone directories in cities, and you would go find, the rich family with a big business and go start calling and convert them to a client and do this asset allocation, pick the stocks, the bonds, and do that. So really from the age of 23 to 29, I felt like I was starting my own business within the business of Goldman Sachs. And then after being going to work for Hank and becoming an investment banker for 5 or 6 years before I took over the region, the Midwest region, for when he went to New York to begin to run the firm, I again kind of ran a pretty significant business, or oversaw a pretty significant business for the firm, and grew it with a great group of people. So I will say I structured my Goldman Sachs career in a way that was pretty darn entrepreneurial. And then in 2002 created what would have been BDT 1.0, which started as an advisory business to owners of businesses. And then 2005, we started deploying capital into those businesses, and to some of them when they needed a different type of capital. So by 2009, I had really done it 2 or 3 times within Goldman Sachs at different types of challenges or businesses. So I kind of always, and I always, I just knew that we could continue to serve our clients well, and maybe on a broader basis, and maybe on a global basis, but the question points to a really important one, and that's being a founder of a business. You kind of dive into the fire, and your name on the door, or your initials on the door, definitely takes it to a new level of both benefit and burden. And you definitely don't want to underachieve in serving your clients, or at least that's the platform that we set, was both our investors, our clients, and making sure that we attracted really great capital from business owners, that we deployed that capital successfully, that we advised our clients in the right way. So it creates it is definitely, as a founder, it is both a burden, but it's an absolutely extraordinary opportunity to create something special. And the good news is, I think we're well on the path to doing that. I think we're, as I say, we're in the 2nd or 3rd inning of a 9-inning game, and we have a small firm with pretty big impact where we touch, and in a very good way. And then I think that's why a couple of years ago, when you get to create, you start with a blank canvas and you get to create what's on that canvas. And we started with the 3 initiatives: advice, capital, and convening, what we call our network, but all in owners of businesses, and to have a global business as opposed to just a US business. And then 2.5 years ago, we added the philanthropic leg, that we decided that it was very important to our investor base. It was very important to our client base. It was very important to us that we gave back, to those that weren't as fortunate. And that I would say I take as much pride in as anything that we've done. And we've done a lot of pretty good things. So it's a great benefit to be a founder and to surround your people. I would say this, at University of Chicago, at Goldman Sachs, usually the highest achievers were those that were most comfortable surrounding themselves with very, very smart and great and capable people, and wanted to be challenged. And I'd say that's always been my, I was allowed to challenge others that were much more senior and experienced to me along the way, both in college and graduate school and Goldman Sachs. And we have that same type of esprit de corps at BDT. And anybody can come tell me that I'm an idiot or that I'm making the wrong decision or have I thought about it this way or that way. And it's great to have that type of environment. So anyway, so I like what's on the canvas so far, and I like the people that are involved. We have 200 people. So as I say, we're a small firm with big impact, and we have a few hundred clients around the world that have very big, important businesses attached to them and very good families attached to them.
Thank you. So several people are interested in hearing more about your passion for family-owned businesses and why you prefer working with family-owned businesses. And I'm going to add just one other piece to this, which is another question that came in about how family-owned businesses are reacting to COVID and the pandemic, and what key questions they should be asking these business owners for long-term sustainability of their businesses.
Yeah, so let's see, two parts to that. The reason we focus on family businesses is they're very long-term in nature and the way they think, not quarterly. Most, probably 80% of the clients that we have and the investors we have are private company owners, but many of them very large. But we do have, you know, some that have both public and private, some that just have public. But what I like about them, they're very long-term, very strategic, and tend to be measured risk takers. When you start talking about companies that have been in business for 30 to 130 years, they understand repetition and can see trends forming. And so I say when Dean Rajan asked me about you know, the former crises, when you think about 1987, you think about 1999/2001, 2008, 2009, any of those, in every single one of those, family business owners leaned in, made more acquisitions, spent more capital, hired more companies in our network, those that I was exposed to. When those that weren't were kind of leaning back, assessing and saying, oh my God. The thing about family businesses is the owners stay the same over 50-year periods, owners being generations of families, and their management teams tend to be very, very stable, and they tend to be more conservatively financed. So as a result, you just have more stable enterprises, thinking long-term, leaning in when there's opportunities, and not leaning out. Tell you a story. In my very first, we have these things called roundtables in February of 2002. After September 11th, I convened 12 of some of the most important multi-billion-dollar big family business owners or founders in the United States in a private room for a day and a half. And I had Hank Paulson, the CEO of Goldman Sachs, and my mentor come speak at dinner. And at dinner, we went around the table, and Hank had basically started by saying that he had met 200 or 300 country leaders and business CEOs around the world. And he described them, if I remember correctly, in a flak jacket, helmet, in a fetal position under their desk, waiting for the storm to pass and the war to pass. And 11 of the 12 members of the round table, when I asked them a series of questions, said they were going to make more acquisitions, employ more people, and spend more capital on their businesses starting now. And every time that something like the COVID crisis has happened, that is what the closely held business owner does. And so I find that, and they're almost always right, by the way. So it's a great leading indicator to us to have that collective information across all sectors of industry with business owners. And it's been so it's that type of insight has been helpful. But I would say that I think the longer term, they don't think in quarters or years, they think in decades. and creating value over decades, whether, artificial intelligence, autonomous vehicles, everything. Most of our clients were there long before the press started talking about it. And cybersecurity and all of the, all of that. It's just, you're kind of a little more quiet about it and a little bit deeper about it. And I don't mean to take away from anybody. I'm just saying at all that are not closely held or anything else. It just happens to be a little niche that we have particular DNA in how to address, and convening them together is helpful in doing so.
Very good. Thank you. Here's a question about bigger picture, what's happening in the US. You mentioned in the conversation with Dean Rajan that the trillions in fiscal and monetary stimulus will have long-term repercussions. What do you think some of those distortions or impacts will be, and how will they manifest? And is there a stimulus program that should exist that no one is talking about?
Yeah, I think that, you do have to start worrying about inflation at some point, but I think that's I do think that's further down the road. I think you think about we have a bit of over leveraging of corporate America that has taken place over the last, 5 to 7 to 8 years, I think. And the United States has never had an over-levered balance sheet, and that's where we could very well end up. That's fine when we have 0% interest rates. The cost of funding our deficits and the amount of debt on a percentage of GDP has exploded and is exploding more and will only get worse. So I think those repercussions are, when they hit, it's hard to predict the timing of it, but it has to have an effect. I do think that I think there's a very big risk that there's a very good thing about the COVID crisis, and the silver lining is it's causing human behavior to move quickly toward change that was otherwise resistant to change. Everything from this Zoom virtual conference call, the fact that you're having them, we're having them, for the last 3 months, I have not flown on an airplane. And prior to that, there wasn't a week that I wasn't on 3 or 4 or 5 of them in any given week. That won't happen after we come out of this. There's a better way to do all this. And you think about artificial intelligence, you think about so many different things that I think will get accelerated here for the good. But then there's a longer term effect of how do we re-educate and redeploy people that get disrupted out of their jobs. And there will be people disrupted out of their jobs people won't go back. Many companies won't go back to the full employment that they were at. They will get more efficient, and they will start to make changes in a pretty dramatic way, I think. So anyway, I don't know if that answers your question.
Yeah, thank you. So you've touched on this a couple of times already, but our participants would like to hear more, if there's more that you can share on why does Warren Buffett like you so much? And what's the secret to getting mentorship of that kind?
You'll have to ask him. How's that? He's, listen, Warren, I'll say that. Right now he thinks I'm in a slump. We haven't delivered a deal to him in a year and a half. So, and there just aren't as many with valuations where they are. But listen, he's, I think what we do a decent job of is listening and solving problems and or coming up with solutions or tailor-made answers to difficult questions or difficult problems. I mean, Warren has been more of a teacher to me than he has been a client. He's been a teacher and a friend, and he has great patience, and he enjoys teaching more than anything, I think, in the world, including compounding his wealth and giving it away. But it's been an extraordinary 20-year relationship, and forever grateful. And I can't tell you how much I've learned from him. And but he's I don't know. You'll have to ask him.
We'll have to schedule a future distinguished speaker series with Warren Buffett.
I'll tell you, since it's out there in the public domain, one time he wrote in his annual report that, I understood the company better than anybody else, Berkshire Hathaway. And then 5 years later, he said, he and Charlie trusted me. I said, God, did it take this long for you to trust me? It took like 7, 8 years. And, but no, but we have so many great clients like Warren and great friends like Warren, as I've said, that have, lived with us since we were kids and taken our advice and taught us a lot along the way. And that's what makes it so special. And now to be able to repay the favor to many and convene people together to learn from each other and share that with everybody is one of the missions that we're on. And I think something we're very proud of.
Thank you. Okay. Founding a merchant bank like BDT makes you more than a banker advisor. It makes you an entrepreneur. I too would like to found a firm and fund in the future. How does entrepreneurship within finance differ from entrepreneurship in the industries that your clients are leaders in, such as consumer, industrials, and so on?
Yeah, I actually don't think it differs a lot. I really don't. I think that you have to play to your strengths and your passions and what you're interested in and what you know. Many people have asked me actually the question, why didn't I do it sooner? BDT would not have been the success that it was had I done it when I was 30 years old or 40 years old. I had this extraordinary wealth of experiences, great experiences at Goldman and doing, as I said, 4 or 5 different careers within a single 27-year career. And each one ended up, and looking back, a building block for the next stage. But that financial crisis in 2008 and 9, I probably learned more than I did in 20 of the 27 years combined, and worked in intimate detail with an awful lot of people in important ways. Without that experience, and I almost left 3 years before, but actually Hank Paulson decided he was going to Secretary of Treasury, and I wanted to, I committed to Lloyd Blankfein and the firm that I would stay longer. And it was probably the smartest move I made. Those last 2 or 3 years and what happened to the markets, and to live through that, frankly, the value it's provided to what we're going through right now is extraordinary. But whether you're going into starting a snack company or a hotel company or a rental car company, it really comes down to some of your basic core competencies, what you know and what you really like to do. As I say, if you don't really love what you do every day, you're not going to be very good at it. Now, you don't know, then it's a little bit of a chicken and an egg. You don't really love something until you get good at it, but you can certainly be interested and engaged in it and learning more every day. But I think that I worry a little bit about how fast this generation and the last, how fast their attention shifts, and maybe a little bit more longevity and going through that pain of, maybe staying at it for another year or two. So long as you have a steep learning curve, keep doing what you're doing. But then I'm a huge advocate of pressing yourself out to anybody young in a career. Push yourself out of your comfort zone. It's what I did. I mean, every 5 or 6 years, I would break it and say, no, I want to do something. I want to do this, or I want to do something else, a way to challenge yourself, but also to grow. And even I'll say all the way to when I watched Hank Paulson leave, he was CEO of Goldman Sachs. That's a pretty heady job and a difficult job in many ways. And the amount that you have to know about so many things in that position, yet when I watched him go be Secretary of Treasury, he grew tenfold again. I mean, it was amazing. And that's where I think, forcing you, no matter where you are, whether you're a 25-year-old deciding what you're going to, one, make sure you've learned everything that you can learn, make sure that you've achieved everything you can achieve, and then push yourself out and make yourself grow again. If that's what turns your crank, and that's going to make the shift. I worry that maybe people don't have the pain threshold to stay at something an extra couple of years. But I easily could have left Goldman a few years before, and I extended even my stay an extra year because of the financial crisis. And it was very smart to do, and it was the right thing to do for my obligation to the firm as well.
Thank you. We probably only have time for 1, maybe 2 more questions. So I'm gonna pick one that I always enjoy hearing the answer to, which is, what are you currently reading, and what's your favorite book?
in the last 13 weeks, I haven't read anything other than financially oriented or our company's balance sheets and information coming from there. I am trying to think what I hate to admit this, but I haven't read a book in the last 6 months. That'll tell you how my life's going through this crisis and everything else. But I can't answer the question.
We can just leave it at that. Yeah. Focused on your work.
Yeah, exactly.
Okay, I think with that, I'm going to pass it back to Dean Rajan, who will close us out. Thank you so much, Byron, for
the last book I read. I did think of it. The last book I read was Educated. So it was about and Hillbilly Elegy were the last two I read about. But it's very also unfortunately or unfortunately about what we do on the philanthropic side and great. But they're great reads if you haven't read them about rural American kids that
thank you
and do things.
Right. Thank you, Star. So Byron, I'll close it with asking you to give some advice to our students. I mean, there are a lot of students listening today who have maybe seen the world shift into a more uncertain time than anything they might have thought about. So just given the history that you have had and what you've seen, what are words that you could tell them to have them look ahead to the future with say, a bit more hope?
Yeah, I think the one thing, it probably doesn't feel good, especially for those that are just graduating this year. You know, you're going into an uncertain job market, but I would say it's an incredible opportunity. When I came out of University of Chicago Business School, it was 1982, and it was the very beginning, the end of a very bad market run over the last 15 or 20 years, and the beginning of one of the longest term upward sloping bull markets, you know, ever. And so it was a great opportunity for me. And I would say that every inflection point in my career, usually when it looks the darkest, you know, there are huge opportunities there for you if you just look for them. And so I'd say that number one, in this type of job market, in this type of environment, you have to be persistent. You have to go just stay at it and find things that you really are interested in. I would not take a job I'm not sure I would take a job just to take a job if they're hard to find, but you need to find ultimately something that you really are interested in, and then you'll start to get better and better at it. But I think the opportunities right now is, I can't think of a more exciting time to be entering, graduating and defining your next chapter. I mean, the world is going to change so much in the next 10 to 15 to 20 years in so many unpredictable ways. And it's exciting. It's exciting in what's being developed, as I referenced earlier, artificial intelligence to autonomous cars to flying taxis to, men and women back on the moon or Mars or wherever. There's a lot going on, and provides just a wealth of opportunities to those with engaging, curious minds and fortitude to, work hard and find your way. But I coming from University of Chicago, business school or the college, you've got a foundation that will be a benefit to you the rest of your life. And whether you travel, I went from flying once to first time I flew from St. Louis, Missouri to Chicago with application in hand, to Chicago to flying the world, circumnavigating the globe about 6 times in 1 year last year. It's wherever you go, you can be proud that you're a University of Chicago graduate. And people do take notice, and they know what that means, and they know that the light bulbs are fully lit up when you tell them that. And there aren't that many universities or educational backgrounds that you can have where 40 years later, in my case, it's as good or better than it was when I went there. It's certainly harder to get into. I'm not sure you guys would have admitted me in today's world, but it's a great place. It's a great background. University of Chicago, everybody should be very proud of, and it's a global brand that is extraordinarily differentiating, and it should serve you well along that path.
Byron, thank you. That was incredibly open, informative, interesting. We really appreciate you taking the time to come on today. Thank you so much.
Thank you very much.
Thanks, everyone.